Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, November 23rd, 2011 is sponsored by Realtik. Alright, let's get right into the mix today, folks. The market's getting slammed again across the board. We're just off the lows of the day. You can see this blue trend line is a very, very key level. I actually want to show you where this blue trend line comes from. And what we have to do is zoom all the way back, all the way back to October 7th, and you can clearly see this is the level we're on right now that we keep on hammering on. This is the 116.85 to 90 area, and that's exactly where the market's hovering right now, where it hit earlier today, where it's coming into support. Now, if you break through this level, you're going to go to the gap fill from the 7th of October, which is all the way down to 115.70. So there's not much support below this one area if it breaks today. Right now, they're doing their best on light volume to hold it above that level, but anything can happen. Continued panic in the world, folks. Bottom line is, it's all about Europe. It continues to be about Europe, all right? Bottom line is, when you look at Europe, what happened today? What caused more selling? What caused this massive move down? Essentially, what happened was there was a bond auction in Germany that did not go well. Why is that such a big deal? Well, as of now, as of before today, all the issues in Europe have been all about Greece, Italy, Spain, Portugal, Ireland, and even a little bit of France. France was kind of an upper rung level, but Germany has been untouchable. Germany has been the highest of the high. Their debt rating, in theory, is even way better than the United States. So the fact that contagion is now shifting over to Germany means it could be an absolutely kind of cataclysmic event going on in Europe. Now, ultimately, I do think they'll get that stuff going on and get a hold of it, but it is something that shocked the markets today. Germany, again, their overall debt rating rivals the best in the world. They're the top rung. If they're having problems, I can only imagine what the U.S. will go through in about 5 years or so when we finally have to deal with our debt issues here. In any case, folks, markets, look at that line. You're still holding that 116.85 to 90 level. We're now back above the 117 level. Volume, again, is getting very, very light as we shift into the end of the day. Remember, the U.S. markets are closed tomorrow for Thanksgiving, and Friday it's a half day with the markets closing at 1 p.m. Eastern Time. I am definitely looking towards Friday and then into Monday in terms of possible trades. I did enter some trades today when we were at the lows of the day, folks. If you want access, you must take that 7-day free trial in the Research Center and in the Intraday Stock Chat. Those are both available at InTheMoneyStocks.com. I encourage you to come join now. I gave out a trade earlier this week. I bought the UNG. Many people would have said, "Oh, what are you doing? You're short oil and you go long the UNG, which is natural gas." Well, guess what, folks? I know what I'm doing here because the methodology at In the Money Stocks, which is proprietary, which we teach to all of our members, works like a charm. I made money on the oil short, and guess what? The UNG today. What is the UNG doing today? Let's take a look right now. The UNG is doing a very, very well. Look at this move today on natural gas. So we're in the money on natural gas. Earlier in the week, we took profits on our short on oil. That's working out amazingly well. And I did enter some other trades today as well. And again, to get access, you come join InTheMoneyStocks.com, join the Research Center and the Intraday Stock Chat. 7-day free trial, no obligation. It's a no-brainer. All right, you'd have to be pretty nuts not to even give it a shot on the free trial to start making the type of money that our members here are making now after joining us. All right, let's go back to the SPY and take a little bit of a look. You can see the market, again, very quiet. Not much to say here on the spiders aside from this support level, which is the SPY, again, tracking the S&P 500. Let's take a look at the dollar. Dollar's having a big day today. Take a look at the dollar. Notice how the dollar's hammering on double top, and the markets are hammering on double bottom. This shows us that the inverse relationship with the dollar and the market continues to hold true. The dollar is the leader, the markets follow. All right, and again, notice that here's your double top on the dollar chart, which is the UUP here, the ETF that tracks the dollar, and the SPY. Let's just shift it back to that. There's your double bottom. Very, very much equal. That's what it's all about. So again, what this tells us is if there's going to be any sort of rally this afternoon, the dollar has to start to fall back. And then it actually should signal a rally in the markets. The market should rally. All right, let's take a look at some other stocks today. What's been going on? One stock I've been watching very closely today is Groupon, GRPN. Stock is getting hammered again. What's so interesting about this is the fall it's had. Just 3 days ago on the 21st, this stock was $27 per share. It's now $17. That's a $10 fall. If you look at the daily chart since its IPO, here it is right here. Look at this 3-bar surge to the downside. Believe it or not, it's going to start to look good around $15. $15 is where I'm starting to like Groupon. If it gets there, I probably will be a buyer via a swing trade. So join the research center to get those swing trade alerts live. Get videos live. Get, analysis, everything you can dream of based on proprietary techniques that are proven success winners with an 8 out of every 10 trade winner ratio to 9 out of every 10 trades ratio. That's the way it is. That's the way we roll. That's the way our profits continue to grow here. All right. Let's take a look here at Goldman Sachs. Goldman Sachs is trading lower, but not a big drop on Goldman. I mean, you would see the markets down this much today. In general, you would expect a little bit more downside on Goldman. That's not the case today. Goldman down $1.20, which is not a good day by any stretch, but it's not horrible. JP Morgan, let's take a look at JPM. JPM is down a little bit more, down 83 cents. Percentage-wise, that's a bigger fall than Goldman. And again, it is off the lows, though, which I do find interesting. I just want to point this out, guys. I do want to point this out. Look at this. First of all, you had a beautiful bottoming tail intraday on JPM. That was a signal it was going to go up. That's exactly what happened. But you are making a higher low here. And what I think is also fascinating to me is if you go to your SPY chart and you look at the chart, the market actually hit the low of the day there perfectly to the penny, right? Low of the day, low of the day. But if you go to JP Morgan, which is a leading stock, which can be a leader in terms of where the market's going to go, you do not have that. You have a higher low. And that tells me that there's a positive divergence developing on the leading stock in the market, and we may be at some point Friday or next Monday starting to rally in this market. All right, take it here. You heard it here first. Watch for that to possibly happen. My guess is we do see some sort of snapback based on what I'm seeing here on the JP Morgan chart. Love this stuff, guys. If you learn this stuff, you're king of the castle, bottom line. Okay? Alrighty, let's take a look at a couple other charts. Apple Computer. Apple had a nice gain yesterday, but it's negating that entire gain today. Take a look at this. Here's your gap fill from a couple days ago. Draw that line straight across, and you can say you're basically negated. The entire move up yesterday is negated today. So too bad for Apple there as it's coming right back in. Daily chart on Apple still probably needs to kiss the 200 moving average. It bounced just shy of that 200 yesterday, and it might need to come back on the daily chart into that level. All right. Let's take a look at Amazon today. AMZN, just before the holiday shopping season kicks off on Friday. You can see Amazon is under a little bit of pressure, and off the highs of the year, it really has fallen pretty significantly from about 245 to 190. That's actually percentage-wise a very, very big move down. All right. Scanning through my watch list, Chevron, Exxon are both getting hit a little bit today. It's really a broad-based sell-off. There's a few things that are positive today. One stock that's doing a little bit better today is First Solar. First Solar had an ugly breakdown yesterday right to a gap window. And I want to show you this, guys. This is where the technology of understanding charts comes into play. See this line right here that I'm putting in at the low of yesterday and the low of today? Now what I want you to do is zoom all the way back. I don't even know if I go far enough, to be honest. Actually, I do, it looks like. You're going to go all the way back to February 14th, 2007. Look at that gap window. Isn't that awesome? So is it surprising based on technicals that you're getting a bounce on First Solar today? You shouldn't be that surprised. Not at all. Gap window, guys. It works. All right, and this is why you have to learn the technicals, why you need to ignore the charts.